In the stock market, price is often a story investors tell themselves. In 2025, the story investors told about Samsung Electronics changed dramatically. And with it, Samsung's market value surged by roughly $86 billion. This is the tale of how a perceived laggard transformed into an AI powerhouse almost overnight. It's a reminder that narratives can matter as much as numbers. One year, Samsung was dismissed as behind the curve. The next, it was hailed as a pivotal player in the hottest tech wave. What changed? Not an overnight technological miracle or a sudden earnings windfall, but the narrative. Rewind to late 2024. Samsung Electronics, a global titan in memory chips and smartphones, was being talked about as a company that had lost its edge. The financial press and analyst commentary painted a picture of a beleaguered giant struggling to keep up with nimbler rivals. Headlines harped on yield issues and missteps in Samsung's chip manufacturing. For instance, Samsung's advanced chip foundry was suffering from chronically poor yields on its 3-nanometer process, hitting only around a 50% yield compared to TSMC's near 90%. This yield gap wasn't just a technical footnote. It had real business consequences. Big clients like Qualcomm and MediaTek were reportedly fleeing to TSMC, leaving Samsung picking up the crumbs in cutting-edge chip orders. In an industry where being on the bleeding edge is everything, Samsung's foundry unit was seen as a clear laggard. The perception of underperformance extended beyond just manufacturing glitches. In 2024, Samsung's stock badly trailed its peers, reflecting the market's gloomy narrative. By October 2024, Samsung's own management felt compelled to apologize for disappointing results. Despite posting profits, the company acknowledged it was facing a serious situation, a rare public mea culpa that underscored how dire things looked. And indeed, the stock's performance mirrored the malaise. Samsung shares had been one of the worst performers among major chip makers that year, down nearly 25% at one point, while rivals surged ahead. It was valued around $244 billion, a far cry from industry leader TSMC's valuation, and investors seemed to believe that Samsung would stay stuck in the shadow of its competitors. Media and analysts piled on with a bearish tone. Samsung was described as unable to keep pace with SK Hynix in memory and TSMC in foundry. Its cutting-edge products were late to market. It was months behind in delivering the latest high-bandwidth memory HBM modules and had delayed mass production of its next-gen chips. Tech outlets ran videos titled, "Why Samsung is Losing the Chip War." The common refrains were that Samsung had missed the boat on the AI boom, was losing to TSMC in the battle for high-end chip clients, and was stuck in a cyclical memory glut. All this fed a prevailing bear case. Samsung was seen as a giant with heavy baggage, lots of legacy business, but lacking the spark in cutting-edge semiconductors. No wonder its market cap was essentially flatlined, anchored by skepticism. At approximately $244 billion, the valuation reflected that investors weren't buying the Samsung story. By the end of 2024, Samsung embodied a cautionary tale in tech. A dominant incumbent struggling with manufacturing snags, bleeding market share, and caught in a downturn of the memory chip cycle. Phrases like yield difficulties and lagging behind TSMC peppered analyst reports. The company's own semiconductor chief spoke of going back to basics to restore competitiveness in an internal memo. In short, the narrative around Samsung was that of a faltering heavyweight, respected for its past achievements, but viewed as stuck in the mud when it came to the new narrative driving tech stocks, the AI revolution. Every good story needs a plot twist, and for Samsung it came as the world woke up to a new reality. Artificial intelligence was creating insatiable demand for memory chips. In early 2025, seemingly out of nowhere, the stodgy old memory business started to look a lot more interesting. What had been viewed as a commoditized low-margin segment DRAM chips, and NAND flash used in everything from phones to PCs, suddenly gained a strategic halo thanks to generative AI and machine learning. The reasoning was simple: training advanced AI models and running data-hungry AI services requires colossal amounts of memory. Data centers were snapping up high-performance memory, especially a specialized type called HBM, or high-bandwidth memory, as fast as Samsung and its rivals could make it. The market narrative began to shift. Memory wasn't just cyclical commodity silicon anymore. It was now a toll booth on the AI superhighway, a critical resource with potentially more pricing power and stability. Investors began to connect the dots. If AI is the new oil, then memory chips were akin to the pipelines, essential for every AI workload. Analysts who had once dismissed DRAM prices as purely a function of oversupply and undersupply started using new language. Suddenly, Samsung's memory division was being discussed not as just another supplier of interchangeable chips, but as a strategic asset in the AI era. As one Reuters piece noted in mid-2025, the boom in AI-centric memory demand was overturning decades of conventional wisdom about the industry. This was a sector that for decades had been treated like a commodity business compared to oil or coal, but the AI surge was brushing off those old concerns. In other words, the narrative was that memory's commodity curse might finally be ending. A niche but fast-growing part of the market, HBM for AI, was supply-constrained and commanded high margins, more like a specialty product than rice or wheat. Samsung, as the world's largest memory producer, found itself in the right place at the right time. By mid-2025, signs of a memory market rebound were evident. After a brutal downturn, DRAM prices were firming up and analysts were penciling in a recovery. Investor sentiment followed. The consensus analyst price target for Samsung Electronics started to creep up, reflecting newfound optimism. In fact, by late 2025, the average price target had risen to around 81,800 Korean won, up from about 75,800 earlier in the year. And notably, analysts were assigning higher valuation multiples to Samsung's earnings. In plain English, investors were now willing to pay a richer price for Samsung's profits, a re-rating that implied the market saw brighter prospects ahead. Citing these shifting winds, brokerage firms issued research notes with a distinctly more bullish tone. Morgan Stanley, for example, highlighted the upside in Samsung's memory business tied to AI. They pointed to Samsung's push into next-gen HBM, for instance, developing HBM3E and sampling HBM4, and noted that if Samsung could secure a big design win, say, getting its newest HBM qualified by a key customer, it would trigger a re-rating of the stock by opening up a significant new TAM, total addressable market opportunity. In other words, success in AI memory could change how investors valued Samsung entirely. Memory chips were no longer seen as mere commodities. They were starting to look like the picks and shovels of the AI gold rush. Even commentators outside of Wall Street noticed the paradigm shift. An analysis by tech industry observers argued that the commodity label for memory had outstayed its welcome, noting that only a tiny oligopoly of firms can manufacture cutting-edge DRAM and especially HBM, making these chips more exclusive than their commodity reputation suggests. The implication: if only 3 companies in the world, Samsung, SK Hynix, and Micron, can meet the exploding demand for advanced AI memory, those companies hold something akin to toll collector positions. Samsung's narrative, consequently, began to morph from biggest player in a lousy business to sleeping giant in a suddenly critical business. The first plot twist of 2025 was that AI turned memory from a zero-growth story to a growth story. Concrete data reinforced this reframing. SK Hynix, Samsung's smaller rival, reported that its entire output of HBM used in top-tier AI accelerators like NVIDIA GPUs was sold out for over a year in advance. NVIDIA's CEO was publicly crediting memory suppliers as crucial partners. Samsung itself announced plans to dramatically boost HBM production, aiming to 2.5 times output in 2024 and double again by 2025. These were not the typical actions of an industry mired in oversupply. They were the moves of suppliers racing to catch up with red-hot demand. By the summer of 2025, as generative AI hype translated into real orders, Samsung's memory division was being recast as a key beneficiary of the AI wave, rather than just the tail end of PC and phone demand cycles. Crucially, investor psychology followed. In stock markets, perception often lags reality, but in 2025, perceptions caught up fast. Each positive data point, a hint of DRAM price uptick here, a brokerage upgrade there, added momentum to Samsung's share price. The company's valuation started expanding beyond the trough multiples of 2024. Samsung Electronics, which had traded at a depressed sub-1x book value and around approximately 15 times earnings, began to see multiple expansion toward 20-plus times earnings as the market started to price in a growth narrative. The story investors were telling themselves was shifting. Samsung was no longer just a cyclical plaything of memory prices, it was becoming a central character in the AI infrastructure boom. And that was before the climax of the story arrived. The true inflection point of Samsung's 2025 narrative can be pinpointed to a single late July weekend, when news broke of a blockbuster partnership. Tesla and Samsung had signed a $16.5 billion deal for Samsung to manufacture Tesla's next-generation AI chips. This was the holy cow moment, the kind of headline that instantly reframes how a company is perceived on Wall Street. For Samsung, it meant validation in an area where it had long been doubted. In the court of investor opinion, Samsung's foundry, contract chip manufacturing business, had been a distant also-ran to TSMC. But here was Tesla, one of the world's most watched tech companies, choosing Samsung to make the brains for its AI-driven ambitions, from self-driving car chips to humanoid robot processors. The immediate market reaction was euphoric. Samsung stock surged nearly 7% in a single day on the news, adding many billions of dollars to its market cap overnight. It was the stock's biggest one-day jump in years, and shares hit their highest level in about 12 months. Headlines around the world emphasized the surprise and significance. Tesla, Samsung signed $16.5 billion AI chip deal, shares surge, was the framing from the Wall Street Journal. Suddenly, Samsung was being talked about in the same breath as Tesla and cutting-edge AI, rather than in the context of missed opportunities. The narrative flipped from doubt to conviction, almost in real time. Why did this particular deal have such a profound impact on sentiment? In part, because it tackled Samsung's narrative weaknesses head-on. It demonstrated that Samsung's foundry could win a top-tier customer for an advanced chip, a strong rebuttal to the idea that nobody but second-tier players go to Samsung for manufacturing. If Elon Musk's Tesla, with its hyper-ambitious AI goals, was willing to entrust Samsung with a decade-long contract for AI silicon, it signaled a new level of confidence in Samsung's tech capabilities. Musk himself hyped the partnership, saying Samsung's new Texas fab would be dedicated to Tesla's AI chips, and that the strategic importance of this is hard to overstate. Coming from tech's most famous visionary, such words rang like a gong for investors. It suggested that Samsung wasn't just catching up, it might have unique advantages, like a giant state-of-the-art fab in Taylor, Texas, ready to churn out AI chips on US soil, aligning with Tesla's needs. Financial analysts and media immediately identified the Tesla deal as a game-changer. One analyst, calling it a turning point, noted, "This new deal breathes some much-needed life into Samsung's business and may signal the start of a turning point for Samsung." The context: Samsung's foundry division had been unprofitable or barely breaking even, investing heavily to reach advanced nodes. The Tesla contract, the largest single-chip supply agreement in Samsung's history, promised a huge, stable revenue stream and a chance to prove Samsung's prowess in AI chips. It was exactly the sort of proof point the market had been waiting for to rewrite Samsung's story. Importantly, the Tesla partnership also seemed to validate Samsung's vertically integrated model in semiconductors. Remember, Samsung is unique. It designs and produces its own memory chips, manufactures logic chips for itself and others, and assembles final devices. For years, critics said this sprawling empire was a weakness, too many fronts to fight on. But the Tesla deal suggested a strength. Samsung can offer a one-stop shop, manufacturing know-how, memory, and packaging, all in-house. Media commentary began to reflect this angle, portraying Samsung as having a strategic edge by virtue of its broad capabilities. Samsung could put both the brain's logic chips and the memory under one roof, potentially optimizing them together. In a world increasingly interested in AI synergy, that suddenly sounded like a superpower. Samsung itself had been talking up this advantage. Its executives highlighted how its control of memory, logic, and even advanced chip packaging could make it a preferred partner for complex AI chip projects. Now Tesla had lent credence to that claim. Consider the language shift. In 2024, commentary about Samsung's foundry was all about yield problems and client defections. In mid-2025, commentary shifted to phrases like Samsung's contract manufacturing gets a lifeline and vertically integrated one-stop partner. Reuters quoted analysts saying the Tesla win may signal the start of a turning point, but also cautioning that Samsung now needs to prove it can deliver to a demanding customer. It was recognized as a pivotal opportunity, one that could open doors to additional large customers if executed well. The subtext: the narrative had shifted to optimism, but Samsung's execution would determine if that narrative held. Still, for investors, the mere fact that Samsung was even in the conversation for leading-edge AI contracts was a big change. The stock's strong rally around the Tesla news reflected a new confidence that Samsung was positioning itself at the heart of the AI wave, not watching from the sidelines. Let's not forget the sheer scale: a $16.5 billion deal running through 2033, as revealed in Samsung's regulatory filing and explicitly confirmed by Elon Musk. It indicated multi-year commitment. It also dovetailed with Samsung's massive investments in its US fabs, suggesting those billions of capex dollars might indeed pay off. Within days of the announcement, the market chatter around Samsung went from "will they ever get a big foundry customer?" to "which big AI customer will Samsung land next?" The story had unmistakably flipped to Samsung as an AI play. By late 2025, the tone surrounding Samsung had undergone a 180-degree turn. The company was no longer primarily described as a laggard or a follower. Instead, new reports and analyses cast Samsung as a resurgent leader in the age of AI. Words like AI powerhouse, vertically integrated advantage, and strategic supplier began to populate the lexicon of journalists and analysts discussing Samsung. The company's multifaceted role, spanning memory chips, cutting-edge logic chips via its foundry, and end-user devices, was now framed as a strength. Samsung could tap the AI boom at multiple levels of the value chain. Sell-side analyst notes in late 2025 brimmed with newfound enthusiasm. A consensus emerged that Samsung's earnings were poised to recover sharply, driven by both improved memory pricing and new foundry business wins. One summary of analyst outlooks highlighted key catalysts behind Samsung's re-rating. Memory pricing power. The brutal down cycle in memory was ending. With AI-driven demand, even older generation DRAM and NAND prices were rebounding as inventories normalized. Supply tightness was possible in certain chips, flipping the script from glut to shortage. Samsung's DRAM leadership, over 1/3 global market share, positioned it to benefit enormously. High-performance products. Samsung's successful development of HBM3E and progress toward HBM4 meant it was closing the gap with SK Hynix. analysts noted that Samsung was validating its latest HBM3E with NVIDIA and targeting mass production of HBM4 by late 2025, aiming to grab a bigger slice of the AI memory pie. No longer was HBM solely a Hynix story. Samsung was in the race. Foundry wins and roadmap. The Tesla deal was expected to be the first of more mega clients to utilize Samsung's foundry if it executes well. With a roadmap to 2-nanometer processes by 2025 to 2026, Samsung was portrayed as narrowing the technology gap with TSMC. The company's ability to fabricate AI-specialized chips like Tesla's became a calling card for potential new business. Samsung's investment in advanced packaging, e.g., its proprietary 3D chip stacking, noted in industry coverage, also gave it an edge in integrating AI chips with memory, a capability very few foundries have. Vertical integration equals strategic edge. Commentators highlighted that Samsung's control over both memory and logic fabrication gave it unparalleled flexibility in an AI-driven world. For instance, Samsung could bundle its high-end HBM memory with its foundry services in deals, essentially offering clients a one-stop solution for AI chip production. A report from Introl on South Korea's AI industry noted that this chaebol model of vertical integration let Samsung combine memory production, foundry services, and packaging under one roof, capabilities distributed across multiple companies elsewhere, and accelerate deployment timelines for customers. This became part of the bullish narrative. Samsung as a uniquely positioned full-stack semiconductor partner in the AI era. Resilient device business with AI twist. While the semiconductor side took center stage, Samsung's diverse businesses, smartphones, consumer electronics, were now seen as complementary strength rather than a distraction, thanks to AI. The company was incorporating on-device AI features in its flagship products, from Galaxy phones to appliances, which gave it an end-to-end AI ecosystem story. Some analyses pointed out that Samsung's diversification into AI-powered consumer gadgets and even automotive tech provided extra resilience and reduced its dependence on any single segment. The media framing evolved to emphasize that Samsung wasn't just a components maker, it was an AI ecosystem player, from cloud data centers to your living room TV. All of this translated into a marked expansion of Samsung's valuation. By Q4 2025, Samsung's market cap had leapt well above $300 billion, a roughly 35% increase from the prior year's doldrums, reflecting that investors were now willing to pay up for Samsung's prospects. The price-to-book and price-to-earnings multiples for Samsung stock climbed significantly as the market's story shifted to growth. In practical terms, what had been a 1x book value stock now traded closer to 1.5 times or more. What had been a mid-teens PE now approached the low 20s. This re-rating was the market essentially saying, "We believe Samsung's future will be much brighter than its recent past."